Hello everyone, this is Victor here. Welcome to my channel today. In today's video, I'm going to talk about Zoom. I'm going to talk about should you invest in Zoom and is it too late to invest in Zoom stock? Here are the topics I'm going to cover today. First, the company's overview. Second, why the stock grew 721.58% year to date in 2020. Third, will Zoom still have a great growth potential after COVID-19 tapers? Fourth, what are the risks to consider? Fifth, why I only invested a small amount of money in Zoom. And sixth, conclusion, and should you invest in Zoom? If you like this video, hit the like button and subscribe. I will post many great videos about stock investing and personal finance that will help you become a great investor. First, as you may already know, Zoom is the most popular video conferencing application and platform in the world compared to Microsoft Skype, Microsoft Teams, Google Meet, Facebook Messenger Rooms, and Cisco's WebEx. According to the company's blog on April 22, 2020, the company had reached over 300 million daily meeting participants. Now I want to talk about the company's competitive advantage. The first and most important thing about Zoom is that it's very easy to use and very user-friendly compared to all other competitors. That's the first thing. The second thing is Zoom's video quality and audio quality are actually much better than a lot of the video conferencing applications out there based on my own personal experience. The third thing is that Zoom is not attached to any other ecosystem such as Microsoft, Google, and Facebook. I think that's another third advantage of Zoom. Zoom meetings is actually free and for a lot of the users out there, as long as you're using Zoom for one-on-one meetings and as long as you're only using up to 40 minutes in the group meetings. You may wonder how the Zoom makes its revenues. Zoom makes all its revenues from its subscription-based model. So for example, if a company wants to have more than 100 participants, or if the company wants to have a group meeting that's over 40 minutes, or if the company wants to have more add-on services such as cloud-based services, then the company will have to register or subscribe to one of Zoom's plans. Zoom also makes its subscription revenues from other services including Zoom Phone, Zoom Webinars, and Zoom Rooms. You may wonder why the Zoom stock actually grew 721.58% year to date in 2020 according to Yahoo Finance. According to the latest management discussion in Q2 this year, the recent enormous revenue growth and net profit growth is mainly due to COVID-19 because more and more organizations are using Zoom's platform in order to help their employees to work from home and in order to basically allow their employees to work anywhere without going to their offices. And also, a lot of the users use Zoom right now in order to connect with the people they care about because a lot of people don't want to meet in large groups. According to the latest Q2 financial report, the company reported very impressive growth across all areas. For example, the company reported 355% year-over-year revenue growth, 458% year-over-year growth in customers with more than 10 employees, 1,188% year-over-year operating cash flow growth, and 2,079% year-over-year free cash flow growth. Basically, Zoom stock increased 721.58% year-to-date this year, mainly because of the enormous revenue growth as well as the user growth this year. The most important thing we should ask is, will Zoom's revenue growth continue, or will Zoom still have great revenue growth after the COVID-19 crisis is over? I was studying Zoom's company financial reports, and here are some of the very interesting things I found about the company. Do you know that the company went IPO or went public in March 2019, and the company was already profitable when it went public? That's the first thing. The second thing is that between 2017 and 2019, the company already had huge revenue growth during this period, right before the COVID-19 started. In my opinion, I believe that Zoom will still have reasonable revenue growth even after the COVID-19 crisis is over. This is because a lot of the companies will still allow their employees to work from home. I think the current trend of working from home will continue going forward. And a lot of the companies will perhaps allow their employees to work from home maybe 1 day or 2 days a week, and that will also help them to reduce their fixed costs, such as the office expenses or the biggest cost, which are the leases. According to Zoom's founder and CEO Eric Yuan, he also believes that a lot of the companies out there will continue the trend of letting their employees work from home using a hybrid system. For example, many of the companies will allow their employees to work from home maybe once a week, twice a week, or 3 times a week. Eric Yuan said this in the latest Q2 earnings. He said, "I think for the foreseeable future, we will all need to work from home, but we have got to think about the long-term planning. So meaning after the pandemic crisis is over, what the new workplace look like, we talk with many customers, partners. We believe in terms of the working from home, this trend will stay. I'm not saying all of us will keep working from home. It's very, very likely it's a hybrid, meaning twice a week or 3 days a week. You can send all employees back at home, and some other time we all keeping working in the office. And also you can further consolidate a lot of these small offices, right? You do not need to have offices everywhere anymore. You also can hire talent almost everywhere. And for us, even for the workplace today, if you look at a lot of the companies, it's a very big open space. I think that may not work anymore in the future. Good news, we do have target for the next 10, maybe 12 months. We can optimize what the future workplace look like. But again, no matter what, I think tools like this can help. If Eric Yuan is right, then Zoom's revenue growth should continue even after the COVID-19 crisis is over. Of course, Zoom is not going to have the same high growth rate as now, but then I think reasonably Zoom should have maybe 20 to 30% revenue growth year over year after the pandemic's over. That's only my prediction right now. Now I want to talk about the risk that we should consider. It's very important for us to consider the risk before you invest in any companies or any stocks. The first and most important risk of Zoom is whether or not the company's revenue growth will still be there after the pandemic is over. I think the revenue growth will still be there, but of course, like I said before, it's not going to be the same and as high as right now when there's the COVID that is causing everybody to stay at home or to work from home. If the trend of working from home will continue, Zoom will still have reasonable growth rate after the pandemic is over. The second risk we should consider is whether or not Zoom's competitors, especially Microsoft Skype or Microsoft Teams, as well as Google Meets, Facebook Messenger Rooms, and Cisco's WebEx can overtake Zoom as the #1 video conferencing platform in the world. I think as of now, Zoom will remain to be the #1 video conferencing platform in the world because Zoom's video quality and audio qualities are amazing. That's the first thing. And the second thing is Zoom's application and platform tend to be the easiest to use compared to all other platforms. The third risk we should consider is Zoom's privacy and security issues. You may have already heard about Zoom's privacy and security issues. Earlier this year, Zoom had a lot of Zoom bombing problems. For example, participants could actually join a Zoom call and post non-suitable for work videos. Zoom's biggest security issue was that Zoom did not have end-to-end encryption before. So that's why many organizations and large enterprises used other alternatives such as Microsoft Teams and other competitors' video conferencing platforms that had end-to-end encryptions. So in a recent Zoomtopia event that happened between October 14th and October 15th, 2020, Zoom announced that they're releasing a preview of their end-to-end encryption for all their services. I think that's a huge thing for Zoom to improve its security problems. Now I want to discuss why I only invested a small amount of money in Zoom. And for disclosure here, I bought some Zoom shares before the Zoomtopia event. My cost per share is on average $559 per share. And my Zoom shares are actually less than 1% of my entire stock portfolio. My reason is this. If Zoom's revenue growth will continue after the pandemic is over at let's say a reasonable rate between 20 to 30% revenue growth year over year, then the stock price will gradually increase over time. But if my thesis is not correct, or if Eric Yuan, the CEO of Zoom, is not correct about predicting Zoom's future revenue growth after the pandemic is over, my exposure to Zoom is very small because I only invested a small amount of money in Zoom, and it's way less than 1% of my entire portfolio. In conclusion, should you invest in Zoom, and is it too late to invest in Zoom? Personally, I think Zoom stock will continue to grow as long as the pandemic is not over, because more and more people will continue to use Zoom, the Zoom's platform, in order to connect with others, people, and also more organizations will continue to use Zoom to help the employees to work from home. The second thing is, even after the pandemic is over, I believe that Zoom will continue to benefit from the current trend of more people working from home, because many organizations and enterprises, I believe, will allow their employees to work from home, let's say part-time or even full-time going forward. Very likely that will be an economic trend. I mentioned this before, Zoom was already profitable when it went public in March 2019, and also the company already had high revenue growth between 2017 and 2019 when it went public. So I think that's a good sign, because the company's revenue growth was already there before the COVID started. COVID-19 pretty much accelerated the company's revenue growth, but I believe that there will be more people working from home going forward, maybe part-time or even full-time, like I stated before. So that will actually help the company to drive its user base as well as revenue growth. Should you invest in Zoom? It really depends on your situation, but the most important thing is you have to do your own research first. You have to understand what you're investing in and know the potential risk of investing in any companies. For me, I decided to invest in Zoom because I like the fact that the company is having very high revenue growth during this pandemic period, and also I believe that more and more people will continue to work from home, mostly part-time, even after the pandemic is over. This means the company should have reasonable or even maybe above average revenue growth rate even after the pandemic is over. So, but for me to mitigate or reduce the risk, I only invested a small amount of money in Zoom. And my number of shares in Zoom, or the amount of money I have in Zoom shares, are actually less than 1% of my entire portfolio. That's how I mitigate the risk of investing in Zoom. Now, if you like this video, smash the like button and subscribe. I will post many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching, everyone.